Kristin. How are you?
Good. How are you, Lindsay?
Awesome. Thank you. So we're happy to have you back today. And if you guys missed our previous episode, we have Kristin Lucas here with us today. She is with Fairway Mortgage and has been in the mortgage industry for more than 8 years. And today I wanted to ask her about the do's and don'ts of the mortgage industry and for your personal finances and things you should do and not do when you are looking to purchase a home. So I know you have some really good tips for us, and I know that you even have some tips to share with potential buyers that are thinking about buying a home, things they can do to get ready.
Absolutely. So I would say the most important thing if you're starting to think about buying a home is just kind of gathering all the major documents and keeping them current along the way. So pay stubs, bank statements, obviously your driver's license, major documents that the lender would need, keeping them in a stack, because along the way, even if it takes you, 3 or 4 months to find a home that you're actually interested in, we do have to update and have the most recent 30 days worth of pay stubs and bank statements typically. So that's the biggest piece. And then the other thing I would say is just making sure to maintain credit. So making sure all the bills are paid on time, not having anything go into collection or delinquency type status. A 30-day late payment is probably the thing that is most detrimental to credit. And so as far as impacting credit scores and things like that. So I usually tell people just try to make sure that you're making all the payments within that 30-day period to avoid any type of late payment. So those are the big pieces. The other thing would be just if your loan officer asks for the documentation, trying to get it in as quickly as possible. That's another thing that really can help expedite the process and make it go a lot smoother and quicker for everybody.
Awesome. Can you tell us a little bit? I know when I got a mortgage a couple of years ago, the documentation was a little bit differently since I'm a 1099 employee. Taxes. How far back do you collect taxes, or what documentation do you need from that? I think that's usually the hardest thing people have finding is to find that.
Yeah. Yep. Great question. So if you are self-employed, I typically request 2 years worth of tax returns. There are caveats to that where sometimes we can get away with 1 year, but it really just depends on the program and the nature of the business and things like that. So I usually always request 2 years worth of tax returns. If you haven't filed, like for example, 2019, right now we have a little bit of an extension for that. So we can use 2017 and 2018 all the way up to that new tax deadline. And then following that, typical extension and stuff like that we can use. So just 2 years most recent that you have filed.
Gotcha. And is that the same for non-1099 employees?
Yes. I mean, I would say if you are a salaried employee or, a full 40-hour week employee that doesn't receive a 25% or more in bonus or commission or anything like that, then typically we actually don't even need a copy of the tax returns.
Oh, okay.
Yeah, so typically it would just be pay stubs and that sort of thing. But if more than 25% of an income is derived from commission or bonus or anything, then in those situations, sometimes we do need 2 years of tax returns as well.
Awesome. Well, that's how to prepare before. I do have one other question too about preparing before. We hear this a lot. I can't buy a house because I have student loans. How does that affect possibly getting a mortgage?
So every program is a little bit different on how we use a calculation. So for example, if you're not in any form of repayment status right now, we do have a calculation that we typically use depending on the program to estimate what a payment would look like. Definitely can qualify for student loans as well. So I encourage everybody, I've had people that have had, $200,000 or more in student loans. I encourage everybody to apply and see if, as long as you qualify for the payment and the proposed housing payment with that, then it's definitely still doable.
Wow, so, that's awesome.
Yeah.
Cool. So now there's some do's and don'ts. Once you do get an offer accepted on a property and the buyer's in escrow, can they let their bills go? Like, what are the do's and don'ts? What should they be doing to help the escrow process and the clearance of all of their documents go more smoothly?
Sure.
So, do the don'ts first.
Okay, so the don'ts, obviously, I'll go back to the credit because that's honestly the biggest piece of everything. So again, making sure that all the payments are made on time, that's huge. And then the second piece would be inquiries. So as you start the home buying process and you see a washer and dryer or things like that, I just tell people try to avoid purchasing anything on credit or having anybody run your credit along the way, because what happens is as we get closer to the end of the process, we do what we would call like a soft credit pull, and it does show if there's new inquiries or increase in balances or anything like that. So I tell everybody, try to just spend as you are right now, but not increase your limits or increase your spending by more than 10%, and then avoid the inquiries because it can impact the qualification piece of it. Another big thing is just, again, making sure you keep all your documentation current. I can't stress that enough. And then as it's asked for, just try to turn it in as quickly as possible. Another piece I would say would be assets. So deposits. We can obviously receive gift documentation. However, there's a process for that. So cash is something that's not an acceptable form. We can't trace it. So we aren't able to use cash as any form of a down payment. So any deposits, we just have to paper trail. So copy of the check, and then we have to source where it came from if it's not a payroll check or something along those lines. So avoiding any type of cash deposit would be a big one. And then let's see, employment changes. So employment change is really, really big. Even if you're in the same line of work and you're transferring to, a like company or something like that, the problem that we see is that it takes, by the time you start and receive your first pay stub, it takes, 2 to 3 weeks. And by that time we could be right at your closing date. So it's better to avoid changing jobs midway, just because we cannot close escrow until we have that first pay stub. So that's a big piece of it. So even if it is the same line of work, I just tell people try to avoid it, at all costs if they can. Yeah. So
any horror stories? I've always heard, like, don't go out and buy a car, don't buy your refrigerator. Have you heard any, maybe not necessarily your horror stories?
Yeah.
I haven't had any. Have you heard of any horror stories happening?
I have actually had to, I've had some interesting scenarios, but I will say this, like large purchases, people have actually had to return the item, whether it be a piece of jewelry or something along those lines, because if it shows up and we have to document what that actually what the payment is, and it doesn't fit into like the debt to income ratio that we're at, then unfortunately they'd have to either return the item, show proof that it's been returned, and it's honestly a large paper trail for the client to have to go through, and to get a statement and show proof of all that being done, because at the end of the day, like, we still have to make sure that they're fitting the guidelines to every single program.
Gotcha. Do you have any tips for people with their credit cards? I know there's usually like a certain threshold that they want to, and it may not be paying off the credit card entirely, but like what's that threshold of a good amount or running balance, I should say, on the credit card?
For like credit scores and stuff like that? Yeah. Okay. So the typical rule would be 30% of whatever the limit is. So if the limit's $1,000, not charging more than $300 per month, and paying it off is totally fine, because you have to keep a balance and pay interest and stuff like that. When we pull the credit, it takes 30 days anyway, typically, once you pay that off, to report. So it will constantly show that you're using the card. So yeah, as long as you keep the limit, I would say 30% or less, that typically will help boost the credit score.
Awesome. So those are all the don'ts to do while you're purchasing a home. What are some of the good things that you can do to make sure that everything goes smoothly? And you kind of touched on some of these earlier, but what are some good things that you can do to help everything go smooth during your escrow to get things closed?
Yeah, one of the big pieces that's really helpful to us is making contact really early on with your homeowner's insurance provider, whoever that might be. We usually start by recommending whoever you're currently with on your auto insurance and calling to get a quote. I recommend 2 or 3 quotes just to kind of get a good comparison, and that's a big help because then we can really dial in the actual payment once that homeowner's insurance, because upfront it's just an estimate. So that's a big help. Getting in touch, especially right now, we have to do verifications of employment all the way to closing. So getting somebody that's really helpful in the HR department that we're able to call directly on the day of closing and make that contact or get the written verification up front. You know, if we're able to get somebody that's helpful with that, that's really good for us. And it, again, makes it a little smoother. I'm trying to think what else. Credit, I mean, again, just making sure you're making all the payments, not overcharging on credit cards, getting the money kind of together earlier on. So if you're getting a gift along the way or anything like that, I can walk through what the gift documentation looks like, but a lot of times it's easier to have the donor deposit the money directly into escrow. It's a little bit less paper trail for everybody as well. Okay. And I think just expediting and getting in all the documents as quickly as possible to the processor, underwriter, loan officer, whoever it might be, just to make sure that the process goes smoothly. And if you can get that done early, usually you can get a fully underwritten approval rather quickly that way.
Gotcha. Yeah, we had a client that needed to get money for closing. It was coming from a retirement account. And unfortunately, it was an out of area lender that didn't, I mean, I'm sure they must have known, but maybe they just didn't have that much experience with it. And the escrow officer actually let the lender know, because I guess that's where the earnest money deposit was coming from as well. The escrow officer let the lender know, like, hey, if this is where the earnest money deposit's coming from, it's like a week process with them. So if you're going to be getting closing funds from them as well, and it's going to, I mean, it's a significant amount. It's like $125,000. The escrow officer was letting the lender know, like, you need to start I know we just opened escrow, but she was really recommending to the lender that they start requesting those funds from that 401k now, or right when they opened the escrow, so that they would have those funds by the time closing happens. Because you know, there could be delays anywhere, and we don't want it to come from a lack of money to close the deal in the end.
Absolutely. And the other piece of that is we have to paper trail it as well. So, you know, if you're doing it the last week, because it only quote unquote takes 2 or 3 days to get the money, well, we still have to present all that documentation to an underwriter and get clearance for it. So it is something that I recommend people do within the first, you know, I would say 7 days or so of getting escrow. Just get that ball rolling so that they can start the process and have all the documentation in time.
Awesome. Yeah. So it sounds like communication's just a big piece of it. I know a lot of people sometimes are leery of sharing information with loan officers and where they're going to be getting their money from. But I always tell the client, you know, it's going to be fine, but you have to let the lender know what you're doing. You know, if your family member is going to be putting the earnest money deposit in, that's fine. But talk to the loan officer first and see if it's better for it to go directly from them to escrow or into the buyer's account and then to escrow. Because I know everybody likes to have it differently, and you know the
right.
So.
Yeah, and there's never too many questions. I'd rather somebody call me and ask me, "Hey, are you okay with me paying off this card, or are you okay with me doing this?" Just because I can help, you know, better direct them what would be most beneficial for them. So, and then if they see, you know, they're paying off an $8,000 credit card and we see a large sum going out, again, honestly, underwriting looks for everything. It's a paper trail for everything. So I would rather somebody call me and ask me these questions, you know, and give them, you know, advice of what I think an underwriter would look for before they actually do it.
Awesome. Is there anything else that you want to share with us about do's or don'ts or anything with the process that I didn't ask or we didn't talk about?
I don't think so. I'm looking over my list I made here. I don't think so. I mean, I think we covered pretty much everything. So I think communication's, like I said, a big piece of it. I do know one more thing. Going out of town. So if you are aware, I've had people, you know, take a vacation or not let me know that they're going to be on vacation the last week of escrow. closing. And that is a big deal because you can sign loan documents out of town, but it takes a few extra days to FedEx the originals back and stuff like that. So if you aren't planning to be in town or even any part of the transaction, just kind of letting everybody know so that we can make plans or arrangements for that to take place.
That's a big one. I'm glad you said that. I totally forgot about that. Yeah, we had a situation on one of my listings recently when the loan docs came in. The buyer's agent said, okay, great, we're going to close tomorrow, but the docs need to go to Sacramento to sign for the buyer today. And I'm just like, we can't close tomorrow if the docs are going to Sacramento. Like, that's going to happen.
No.
So I'm glad you mentioned that. That's great.
Yeah.
Awesome. Well, appreciate you being here with us
Thanks.
today and answering all of our questions. And I am sure we will have you on here again soon.
Sounds good. Thank you so much for having me.
All right. Thank you.